Hello, everybody. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services. And it's time again for our weekly wrap up. Graham, what do you have for us this week?
Yeah, thank you, Stacy. A volatile week. We were reporting on last week, so we're already into the next week. And it's great because now we can look back and see what's really going on. We can kind of see where this car is coming, right? So we have dramatic intraday volatility between growth, high speculative areas compared to value areas, and where the market's trying to find a balance. As we said to our listeners, we've been talking to our clients, I feel for an extended amount of time about this, is that you want to not focus on growth or value, but find growth at a reasonable price. Abbreviation for that might be GARP, right? We don't want to buy companies or own companies that have earnings in the future, but a really cool product today. Nothing wrong with those companies, but in a rising interest rate environment, and that was a lot of the topic last week, how much the Fed will raise rates to stave off this high inflation, how many rate hikes they'll have, and then the market's trying to price that in. And that could be very harmful for highly speculative, earnings in the future stocks. So again, our overall theme is a good balance between growth at a reasonable price and value. We love dividends. We love solid companies with solid earnings and solid margins. You focus on those areas, yeah, you'll take a ride a bit, but you know what? You're not going to be out of the game, if that makes sense. A couple of things that I saw last week, we saw gross domestic product up 6.9%. That is a huge growth for the U.S. economy. So the U.S. economy is not slowing, at least not right now. That could have been in part to a build in inventory, which could slow in the future as the supply chains might be opening up a little bit. We also saw the consumer spending down 1% for the year, as well as we saw home sales down 3.8% for the year. I don't know if that's setting a tone that all of a sudden we're seeing a more conservative consumer. Maybe they've already bought ahead everything they wanted and they're just lowering their buying, or if we're seeing home sales starting to moderate a bit. But it is interesting to start to pay attention on that. Last but not least, I think geopolitical events. Russia potentially invading a neighbor. That's geopolitical events that just puts question marks, right, in what's going on in the market. Last but not least, Stacy, I'll wrap it up with this. One thing I think we're seeing in this market is the appetite for rate increases. And I want to be very straightforward with our viewers on this. There's a lot of conjecture out there that they're going to go up 3 hikes, 4 hikes, 7 hikes, 8 hikes. I think we have to realize that we have to have some faith in the Fed. Not that they're going to necessarily get this right, but they're going to be methodical in their approach. I don't know if they'll necessarily go up 7 or 8 hikes, but that sounds extremely aggressive and not a pattern I've seen in the past. I would probably speculate a little more around 3 or 4 hikes. That should tamper down some of the over volatile nature if we start to see that of this market.
Okay. Well, I'm going to ask you a question that I know you've heard a dozen times probably already today. What is an investor to do in this market?
You know what? Stand pat, but don't be mindless about the situation we're in, right? We are big believers. If you've listened, if you work with us, we are huge proponents of having a plan ahead. Doesn't mean you don't make adjustments in some small tweaks, but this is not an environment that you've got to back away completely to your plan. So let's put it this way. If you're underweight stocks, maybe you start to add to those areas that have gotten beaten up the most. Maybe some of the good growth side or some small caps and mid caps and a little international. If you're overweight growth, speculative growth, maybe you pare that back a little bit and just be mindful that the situation has changed a little bit. So maybe a little tweak might not be bad. Maybe having a little extra cash in your account if you need those funds immediately, or if you're taking income from your accounts now. I don't think this is a time where we got to speculate by any stretch. Don't think that's the best move, but I think a good balanced approach that we've always preached is the right place to be.
Okay, all right. And so do we feel like this volatility has wheels? I mean, do you think it's going to continue and continue to go down the downside?
I don't know how much more downside we have, but I think volatility is here to stay with us, right? We've been calling this for a year plus out. Definitely for the last 6 months, be prepared for it. It's never fun when you got to go through it, but it's a part of investing. So yeah, we could go down technically if we break some key levels, another 5-10%. But I don't want to create a wall of worry here. We already have a huge wall of worry with consumers. And actually, when consumer sentiment is so low like it is now, that's actually a positive. So if you take the flip side of that, we might be seeing more of bottoms and setting a bottom, which is a process, than going down a lot more. We'll just have to see. Hang in. I think you'll be just fine with a good balanced approach.
I like that silver lining there, Graham. Thank you for all that information. And to our viewers, thank you for joining us today. And every time you watch our weekly wrap up. And don't forget that we do have not only our weekly wrap ups, but our monthly webinars on our website. So please check those out. We do have a lot of good information on those as well. And we are right in the midst of our first Retirement Planning Today class of the year. And so if you missed out on that, don't worry, we do have another one scheduled for March, and I'll be happy to give you all of the details on that a little bit closer to March. So thanks so much again for joining us, and we'll look forward to seeing you again next week. Thank you.
Take care.